You're not in a free market. You're inside a wealth machine built to keep you working forever. It looks like freedom. You can choose your job, your city, your bank, even your investments. But beneath that illusion is a system of rules, invisible, ancient, and deliberate, that quietly funnels wealth upward, generation after generation. It didn't happen by accident. It was built this way. In the beginning, capitalism was about production, the idea that value came from work and wealth came from creating something useful. But over time, the system changed. It stopped rewarding what people made and started rewarding what they owned. The industrial age gave way to the financial age, and money became the product itself. Once upon a time, the rich made their fortunes in factories and railroads. Now they make it by owning the factories and railroads, or by owning the money that funds them. The world moved from creating wealth to extracting it. That shift began in the early 1970s. When the United States abandoned the gold standard in 1971, the link between money and real value was severed. For the first time, currency could be created without limit. The Federal Reserve could print endlessly, and governments could spend endlessly, all financed by debt. But debt is a contract, and every contract has two sides, the debtor and the creditor. The rich became the creditors. When governments borrow, they borrow from investors, the holders of capital. And every new dollar of debt is a promise that future taxpayers will pay interest on it. Every bond, every treasury note, every piece of government borrowing is a stream of income that flows upward. You pay taxes. The government pays interest. The owners of the bonds, the wealthy, might collect. It's not theft, it's design. Inflation was sold as a solution, a way to keep economies growing. But it's a tool of quiet redistribution. When money loses value, debt becomes cheaper to repay, which benefits those who owe the most. Governments, corporations, and the wealthy. The ones who lose are savers, wage earners, and the poor. The system trains you to save in cash, the one asset guaranteed to lose value over time. Meanwhile, the rich save in assets that inflate: stocks, real estate, fine art, private equity. Every time prices rise, the gap between the two worlds widens. This isn't just economics, it's architecture. In the 20th century, central banking became the operating system of the modern world, and the idea was simple: manage growth through credit and interest rates. But in practice, it turned money into policy, a tool for controlling human behavior. Low rates encourage borrowing. Borrowing fuels consumption. Consumption drives GDP, and GDP growth becomes the measure of progress. But GDP doesn't measure happiness or equality. It measures activity, any activity. $1 billion spent cleaning up pollution counts as growth. So does $1 trillion in debt. As long as the numbers go up, the illusion holds. And while the bottom 90% work to earn, the top 10% earn from ownership. The system pays them not for what they do, but for what they hold. In 1980, the richest 1% owned about 23% of U.S. wealth. By 2025, they own over 32%. The bottom half of the population controls barely 2%. The rest live in the illusion of mobility, the belief that hard work alone can break the cycle. But hard work doesn't beat compound interest. The wealth trap isn't built on greed. It's built on mathematics. When the return on capital exceeds the growth of wages, as it has for decades, inequality doesn't just happen, it accelerates. The rich don't need to steal from the poor. The system does it automatically. Every paycheck you earn is taxed first. But wealth grows tax deferred. If you make money from labor, you're a citizen. If you make money from assets, you're an investor. And the tax code loves investors. Capital gains are taxed less than wages. Dividends are taxed less than salaries. Real estate can be depreciated on paper even as it appreciates in value. Entire fortunes can be transferred tax-free through trusts, loopholes, and offshore entities. Meanwhile, the average worker pays for everything: roads, armies, interest on national debt, through a tax system that rewards ownership over effort. This is the quiet genius of the modern economy. It doesn't need to suppress you with force. It just prices you out. The wealth trap doesn't feel like oppression. It feels like participation. You sign the mortgage, you take the loan, you invest in the market, you believe you're part of the game. But the rules were written long before you arrived, and they weren't written for you. In the 1980s, globalization and deregulation turbocharged the machine. Factories moved overseas, labor unions weakened, and wages stagnated. But asset prices, fueled by cheap credit, exploded. The gap between productivity and pay widened, and the wealth that once built the middle class began flowing upward again. The rich didn't need to pay workers more. They just lent them money. Credit cards replaced raises. Student loans replaced affordable education. Mortgages replaced affordable housing. The population kept spending, and the economy kept growing, all on borrowed time. Debt became the product that kept capitalism alive. And while the public lived on credit, corporations found a new trick: buybacks. Instead of reinvesting profits into jobs or innovation, companies started using them to repurchase their own stock, inflating share prices and executive bonuses. Between 2010 and 2024, U.S. corporations spent over $10 trillion on stock buybacks, more than the GDP of Japan. It was the perfect feedback loop. Central banks printed money to keep markets rising. Corporations used cheap credit to buy their own shares. Investors, the top 1%, watched their wealth compound. And ordinary people were told it was a bull market, a sign of national strength. But the market isn't the economy. It's the scoreboard of the wealthy. The trap works because it doesn't feel like one. You're free to participate. You can buy stocks, crypto, property, you can hustle. But the entry price keeps rising faster than your ability to catch up. And every time you borrow to chase it, the trap closes tighter. The house you buy with a loan, it appreciates. But the bank collects the interest. The college degree that costs a fortune, the lender profits whether you succeed or not. The stocks you invest in, they rise because central banks print money to protect asset holders, not wage earners. Every road leads to the same place. Gotta get wealth flowing upward. The system isn't broken. It's perfectly balanced in favor of those who built it. And the top doesn't need to conspire. It doesn't even need to try. The rules are self-reinforcing. You work for wages that lose value to inflation. You borrow to maintain your lifestyle. You pay interest to institutions that reinvest it into the markets that inflate their wealth further. It's not a conspiracy. It's a cycle. And the brilliance of the wealth trap is that it hides behind choice. You're free to chase opportunity, but never free to stop chasing. Because the moment you stop, the bills, the debt, the inflation start catching up. The machine doesn't care if you're happy, only that you keep moving, keep spending, keep working, keep believing. And that's how the trap stays invisible. Because as long as people believe they're one lucky break away from escaping, they'll never notice they were never meant to escape at all. The trap doesn't stop at inequality. It evolves. It adapts. And in the 21st century, it has perfected itself. Once upon a time, wealth and power were visible. Castles, factories, boardrooms. Today, they're invisible, coded into laws, algorithms, and central bank balance sheets. The rich don't need to build new systems of control. They own the ones you already live in. Every government, every economy, every job runs on one assumption, that you'll keep moving. You'll keep working, borrowing, spending, producing, and consuming. The machine doesn't survive if you stop. But what makes it so efficient now is that it no longer looks like a machine at all. It looks like choice. The illusion of freedom keeps the trap alive. The system tells you to work hard, save money, and invest for the future. But the numbers don't add up. Wages haven't kept pace with productivity in over 50 years. The average worker's output has doubled since the 1970s, yet their share of wealth has shrunk. The gap between what people create and what they keep grows wider each year. Meanwhile, the returns on capital, dividends, interest, and rent keep compounding for those who already have enough to invest. That's the secret formula of the wealth trap. Wage stagnation at the bottom, asset inflation at the top. Inflation eats labor. Cheap credit inflates assets. The poor buy goods that lose value. The rich buy assets that gain it. The system recycles purchasing power upward, invisibly, automatically, endlessly. And while the rich are earning passive income, the rest are working active debt. Most people now spend their lives paying interest on mortgages, on student loans, on credit cards. Every payment moves money upward to banks, shareholders, and governments. The financial sector has learned that debt is more profitable than labor. A worker can only give 40 hours a week. A debtor gives 24 hours a day. Even taxes, the one thing designed to redistribute wealth, now work in reverse. Corporations have perfected the art of tax avoidance. They move profits offshore, route earnings through subsidiaries, and lobby for loopholes that cost less than their accountants save them. The burden shifts downward. Payroll taxes, consumption taxes, and inflation taxes make sure the majority pay more, not in law, but in practice. When governments print money to cover deficits, the new money flows through banks and asset markets first. It inflates stocks and property before it reaches wages. By the time it trickles down, prices have already risen. It's a quiet transfer of wealth disguised as stimulus. You don't feel it day to day. You feel it when your rent doubles, when your groceries cost more, when your savings buy less. That's how the trap keeps you calm, by stretching the pain over time. Every empire in history learned that direct control breeds rebellion. Economic control breeds loyalty. As long as people can vote, shop, and dream, they'll never realize they're paying for someone else's freedom. And so the modern world built the perfect system, a financial matrix, where every escape route leads back to the same owners. Buy a home, you'll owe the bank. Invest in stocks, you'll inflate corporate profits. Start a business, you'll depend on credit. Save in cash, you'll lose to inflation. Even rebellion, crypto, tech startups, innovation, ends up absorbed. When Bitcoin threatened the system, Wall Street turned it into an asset class. When technology promised decentralization, venture capital privatized it. Every disruption becomes another revenue stream, because the trap doesn't resist change, it profits from it. The secret isn't control, it's capture. The economy doesn't care how you participate, only that you do. Spend, save, borrow, invest. It all flows upward in the end. The house always wins because the house is the system. This is how wealth inequality becomes permanent. Not because of conspiracy, but because of momentum. The rich don't need to change the rules anymore. The rules reinforce themselves. When money makes money faster than people make money, the outcome is inevitable. For the top 1%, wealth compounds like gravity, pulling more toward itself. They can borrow at lower rates, invest in better opportunities, and hedge against every downturn. Meanwhile, the middle class lives at the mercy of the cycle. Every recession resets their progress. Every boom rewards those already inside. And while politicians promise reform, they work within the same framework, funded by the same donors, measured by the same markets, trapped by the same debt. Governments don't regulate capital anymore. They depend on it, because without constant borrowing and asset growth, the illusion of prosperity collapses. The trap must expand or die. That's why every solution only deepens it. Higher minimum wages lead to higher prices. Tax hikes are offset by loopholes. Welfare programs are funded with new debt, which is bought by the same investors who caused the inequality in the first place. It's redistribution in reverse. Public spending that pays private interest. Even the idea of financial freedom has been monetized. You're told to hustle, to invest, to chase independence through entrepreneurship. But the platforms that enable it, from e-commerce to finance apps, all take their cut. They sell you the illusion of freedom while tracking, taxing, and monetizing every click. The modern economy doesn't produce wealth. It extracts it from time, attention, and energy. Every app you use, every ad you see, every dollar you spend turns into data, which becomes profit. You're not just a consumer anymore, you're collateral. And that's the final form of the wealth trap. Not financial, but psychological. It doesn't need to convince you that the system is fair. It just needs to convince you it's inevitable, that inequality is natural, that billionaires are proof of success, not symptoms of imbalance, that one day, if you work hard enough, you'll join them. That's the myth that keeps the engine running. Every society needs a dream to hide its hierarchy. The American dream was perfect, a story that turned inequality into aspiration. It promised that anyone could rise while ensuring most never would. Because for every person who climbs the ladder, 100 hold it steady. And as long as they believe they're climbing, they'll never see who's standing on top. But even dreams have limits. The debt is too high, the wages too low, the price is too inflated, the trap is stretched thin. And as people begin to see it, faith begins to break. That's why you see protests, populism, and disillusionment. Not rebellion against capitalism itself, but against its broken promises. The machine is still running, but it's running on fumes. When the illusion finally cracks, it won't be from revolution. It'll be from exhaustion. People will simply stop believing that working harder changes anything. And when that belief dies, so does the system built on it. Because the wealth trap doesn't need chains, it needs hope. The moment people stop hoping, stop chasing the carrot, stop buying the dream, the trap loses its fuel. That's the paradox of the modern world. The wealthiest civilization in history can't afford to let its citizens stop running. Because the moment they do, the engine stops spinning and the entire illusion comes crashing down. And maybe that's where the story ends. Not with collapse, but awakening. The realization that the system only works because we believe it does. You're not in a free market. You're in a wealth machine. And the first step to escaping it isn't fighting harder. It's finally seeing it.